Welcome everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates. Hey, welcome back everyone. Let's get into it. AMC won a hard-fought battle for $4 a share, finishing the day at $4.04, up 7.73% on 64.3 million shares traded. The ape finished at $2.19, up 3.3%. on 35.4 million shares traded, bringing the consolidated price of AMC and APE to 6.23, up 6.13% on 99.7 million shares traded. With about 10 minutes to go in the after-hour session, AMC is at 4.179, up 3.45%, and the ape is at 220, up 0.46%. Interactive Brokers isn't even bothering updating their cost to borrow. They've got $879 with 35,000 shares available, but over at Webull, I see a short selling fee rate of 1,067.91%. That sounds expensive. As of today's close, I've got Max Payne at 450 and a put call ratio of 2.51. There's 141,000 calls in the money expiring tomorrow, August 18th, and at the $5 strike, I see 138,762 calls in the money. And moving over to Reddit's sentiment and mention tracker, all of my favorites are in the top 10. AMC coming in at 4th with 383 mentions. GME coming in at 6th with 273 mentions. Ape coming in at 9th with 189 mentions. And XRP bringing up the rear in the 10th position, 177 mentions, up 16%. And the black swans fill the skies as stocks tumble for third straight day as yields continue to climb. Mortgage rates top 7%, hitting a 21-year high. And from Benzinga, market sentiment teeters as U.S. indices break key support levels. All three leading U.S. stock indices, the S&P 500, NASDAQ 100, and Russell 2000, have simultaneously breached a crucial technical support level this week, the 50-day moving average. And from Markets Insider, markets should brace for a turbulent few weeks as slow-motion rate shock continues. From the article, stocks could be in for more Fed-induced turbulence, according to DataTrek research. That's partly because the Fed is unlikely to stop its quantitative tightening regime. The Fed has reduced its balance sheet aggressively over the past year, which could weigh on stocks. The stock market is reacting poorly to August's run-up in interest rates after key bond yields spent most of this year trending lower. In response to the outlook, the Fed Reserve is likely close to being done raising interest rates. According to DataTrek, though, investors should buckle up for even more choppiness ahead. That's because even after the Fed stops hiking interest rates, there's another policy tool the central bank can use to keep tightening monetary policy: quantitative tightening, the central bank's practice of reducing its balance sheet to dry up liquidity in markets and tighten financial conditions. And now for some international swans. China Evergrande Group files Chapter 15 bankruptcy in New York. And from Business Insider, China's tanking economy is costing major U.S. companies and could throw cold water on America's economic boom. And from The Telegraph, specter of hyperinflation hangs over Putin as Russian economy crumbles. And I think you guys are going to love this one. Is this a wild coincidence or what? Follow me over to the FINRA website under the heading Short Interest Reporting. FINRA requires firms to report short interest positions in all customer and proprietary accounts in all equity securities twice a month. All short interest positions must be reported by 6 p.m. Eastern Time on the second business day after the reporting settlement date designated by FINRA. Now, the current settlement date designated by FINRA is this past Tuesday, August 15th. The due date was today, August 17th. Yeah, it might have something to do with that run-up today. And guess when the publication date is? Next Thursday, August 24th. What has Adam got planned for August 24th? Well, by now you know the Class A common stock, AMC, commences trading on a 1-for-10 split adjusted basis for no good reason. It's also the last day of trading of AMC's preferred equity units, or APE, the pounce, and it's also the record date set at close of business for holders of Class A common stock entitled to litigation settlement payments. So anything can happen by next Thursday, Adam. I sure hope that we don't get a peek at that short interest before your reverse split. And it turns out I'm not the only one suspicious of the August 24th split date. Check out this sharp DD by UCopy, why announcing reverse split on August 24th wasn't by accident. It's strategically well planned out. His research revealed that there have been multiple short covering events connected to the short interest publication dates, both for AMC and GME. A lot can happen before next Thursday. Even if this split is delayed one day, it could be catastrophic for our predatory short hedge fund friends. And one last swan before I go. From Business Insider, deflation could soon hit the U.S. as real estate and stock prices are at risk of crashing, economist says. The S&P 500 has rallied 16% from the start of the year and now risks being dangerously overpriced. To be continued. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.